Good morning, everyone, and welcome to Stockology. And it is quite early for market to start, but it will start eventually. Yesterday, market was quite of a dip. You can see there, Nifty was down, so as the Bank Nifty and Sensex and all, which is a huge hit toward the sentiments of the markets. But as we are still on our way to continue our Nifty 50 share analysis. We will continue that. And last time we saw BPCL, right? And today we are going for IndusInd Bank. Indus Bank. Okay. The price of the price of the share yesterday was 926.45, which was down. Obviously, you can see there. And yesterday's high was 947, low was 923.7, and the share closes at is lowest side. 52-week high was 1576, which is extremely high, as you can see there, as compared to right now. And right now it is in its 52-week low. And usually when you are 56-week low or at high, usually in condition of a high, there we assume there is not certainty, but we assume that share is going to go high. And in condition of 52-week low, we assume that share is going to fall more. But if we neglect that criteria, we have to analyze a share the way we always do. You can see 90% I'm not going to say people, but 90% investors are buying it. Profit, net worth, revenue, everything is good. So on fundamental basis, it is good as can get. Foreign institutions have declined a little in it over the years, and mutual fund has risen. That's a good sign, but not exactly a good sign. The market is moved by the investment of FIIs and DIIs, and at this point, FII are usually or they are taking their money out of the market. But if you look, the DIIs, the domestic institute investors, are putting their money as much as the FIIs are removing. But the global sentiment, if you have seen recently, is in downtrend. So the Indian market is also going in downtrend. That's the reason basically of the recent we have seen how the market has uh, gone in the last few weeks, but nothing to be worried about. And let's back to our initial chart analysis, which we always do. Okay, highs and the lows, right? We can make this as well, but we're not recent high. It could work as it could not. The reason I'm making this as a resistance here because this is the recent high. That means in this particular, I can see multiple lows there. This one is one of those. And if you go with the recent one, I can go with this, but I'll consider this one as my recent low and months. Now we'll go in weeks, recent high. In weeks, I'm usually concerned about are I'm going to make multiple line touch this. Multiple point touch are support. This can work as a good support. I can also go with this, which is not a bad one. Now I can make this one as well on initial way. Now, if we see in days, the one thing I can go with this, I can go with this, I can go with many out of here. But right now, as the market is falling, I'm not much of a concern about its resistance right now. I'm much focused on its support. So let's check in candles. Okay, as you can see, market is obviously falling, and yep. And yesterday was a gap up opening, the gap down opening, up opening. So that is a bad sign as well. So at this point, if you ask me, am I going to consider to buy it at this point? I'm not, because right now my support and resistance are extremely far. Like my support is going to be 1002.5 and my support is going to be 851.65, which is quite far of a number, but at this particular point it could work as decent support and resistance because market is extremely volatile, and so I'm going to consider them as my support and resistance. So I'm going to go with 1002.5 as my support alert, and uh, where it is 851.7 851.7 as my support. Now this is from my perspective of support and resistance, but if you have your own understanding of the share, how you like interact with it, that's your own, but that's what I think of this particular share, that how it's going to move. But as you can see, the market is falling down nowadays, and I usually says about this is, if you are seeing a particular sector, like I am going through the Nifty 50, but like this is a bank, so you have to look at the bank sector to get an idea that how is bank is working. And if all the private sector banks are going down, or all the public sector banks are going down, or all over the banks are going down or up, it will give you a little bit idea. And one more thing, don't get like manipulated with the idea that, oh, I'll buy the bank of this, I will buy the share of this bank, this bank, this bank. No, you have to diversify your share as much as possible. Having a one bank or two bank in your portfolio is not big deal, but out of 10 you have like 6 banks, it doesn't make much of a sense. Like if a banking sector is going down, that means more than half of your sector is going down. Huh, doesn't make sense. So that's all from today, and see you in the next video, probably tomorrow. And thanks for watching Stockology, and keep supporting. And I saw that one of you also subscribe, so that's good. It's just a good motivation to do what I do. And in the end, thanks for watching Stockology.